Good afternoon, everyone. My name is Keith Bowers. I'm the Director for the Office of Economic Vitality. And today, as a part of our Mid-Week celebration, a Minority Enterprise Development Week, we are facilitating a conversation with some of our community lenders regarding raising capital. As you all know, capital is the lifeblood of any business, and having a relationship that provides you an opportunity to access capital has been one of the most critical aspects in terms of being able to grow and expand your business and even start your business. So one of the things we want to do today is we will have a conversation with 3 representatives from financial institutions located right here in Tallahassee. And hopefully we'll gain some insight and some information and some tips. And then also we want to leave some time for your individual questions. So at this point, I would like to introduce 2 of our panelists. First of all, we have Chris Edwards, who is the market president at MidSouth Bank. And we have joining us Sherwood Brown, who is the president of the Northwest Florida Black Business Investment Corporation. Gentlemen, welcome to our panel discussion on raising capital. So if you would, could you please, we'll start with Sherwood. Sherwood, could you please just give our participants an overview of what the Northwest Florida Black Business Investment Corporation does? A little bit of background about who you are, what you do, and any other information that you want to share.
Okay. Well, good morning, everybody. I am Sherwood Brown, president of the Northwest Florida Black Business Investment Corporation, often referred to as the BBIC. We've been around since 1992, and essentially our mission has been to help Black businesses either get in business or stay in business or grow their businesses. We started out making loan guarantees to Black-owned businesses in the Northwest Florida Panhandle, and our region runs from Pensacola all the way back over to Madison County. Our initial focus was to give loan guarantees to where a business could not necessarily get a loan from the bank. We would give them a guarantee that would perhaps allow them to get approved for that loan. Later on, we actually started originating our own loans directly to those borrowers. And we're still looking at some of the main things that the banks are looking at. However, there's a little bit of flexibility, and we offer a lot of technical assistance to get them approved. Our goal has always been to make Black-owned businesses bankable. In other words, we're not the end bank, we're the solution to help them to get to where they can get financing from that bank. Fairly recently, last year, we entered into a partnership with the Big Bend Minority Chamber of Commerce, where we're now allowing a microloan program with them. This has expanded our reach because these loans will be available to anyone who is a member of the Big Bend Minority Chamber, which would be more than African Americans. It could be anyone who meet their criteria. So that has allowed us to expand our reach. Those microloans run between $5,000 and $20,000, and we have some relaxed criteria for those. So that's basically a nutshell of what we do at the Northwest Florida BBIC.
All right, great. Thank you, Sherwood. So Chris, can you give us a similar pitch on what you do at MidSouth Bank and what MidSouth Bank has to offer to small businesses?
Yes, thank you, Keith. Appreciate you having me on. MidSouth Bank is a 115-year-old family-owned bank. And being family-owned is important because we realize the value of the small businesses in the community. We're essentially a small business, just like a lot of our clients are. We're headquartered in Dothan, Alabama. We have offices in the lower part of Alabama as well as in North Florida. We've got one in Panama City, one in Panama City Beach, Fort Walton Beach, and then we opened our office here in Tallahassee. We opened a loan production office 3 years ago, and then opened our first branch here. We're on South Monroe about a year and a half ago. We do offer a full range of business loans, business and consumer loans, deposit products, and things like that. Specifically talking on the business side for our loans, generally, like Sherwood kind of alluded to, a lot of times we work with existing businesses. Businesses have been open for a couple of years. We do some startup financing, and I'll get to that in a minute. But a lot of what we do is for businesses looking to expand, looking to either go into a new facility where they need to either buy the facility, construct a facility. If they're going into a place where they're leasing, leasehold improvements to be able to make the facility what they need it to be. Also equipment, we do a lot of equipment financing, vehicle financing for businesses, things like that. Like I said, and generally businesses have been open a couple years. Kind of the starting point for a lot of our businesses is having 2 years worth of tax returns. So we kind of do that. We do look at all loan requests kind of through two lenses. We look at it through your traditional bank lens, and then we also look at it with an SBA piece to it. And what that does is it allows us to kind of expand our scope of what we can do and who we can bring in as a client. You know, by looking at it through the SBA, there's some advantages and disadvantages to SBA. One, with an SBA, there's two different products that we mostly use. It's the 504 and the 7A. One of the advantages of the SBA lending program is you have a government backing. The bank gets a government guarantee on the loan, or at least a portion of the loan, which makes the bank feel good about being able to lend the money when maybe they're kind of, you know, that borrower, that request might be kind of on the edge of whether or not it's something we would be able to do. You know, so you get, a lot of times with the SBA, you get advantages. You can get some better terms. You can get some lower rates sometimes, provides the bank, again, with a guarantee, which makes us feel good. And on the 504s, it also reduces our loan to value on some real estate, which makes the bank feel good. Some of the disadvantages, the fees there are additional fees that go along with the SBA lending. Now, I will say this, right now, the SBA is waiving some of those fees. So that's something that's not quite as onerous as it was before. And the process can take a little bit longer. Anytime you have more people involved, it's going to take a little bit longer. So that's one of the drawbacks. Two of the programs that I talked about, one is the 7A. These are generally working capital type loans, shorter terms normally. You can refinance business debt with these. Some of the examples you can use it. You can purchase furniture, fixtures, equipment, supplies, leasehold improvements. Can be used to purchase real estate, but that's really part of the 504 program. And 504 are longer term. You know, you're purchasing real estate, you're constructing real estate. This is a permanent loan. And with the 7A, the bank gets a guarantee on a percentage of the loan, whereas the 504, there's actually two loans, and we can get more in depth with that if anybody has any questions on that. To be eligible for an SBA loan, you need to be a for-profit business that operates in the United States, have invested equity in the business, in your time, and then also in your own personal, you know, in your money. And you've exhausted other financing options. Basically, you can't get credit on those terms anywhere else. So those are some of the advantages and some of the different things that we offer when folks are looking for capital. You know, again, we look at it regular, but then we also look at it through the SBA.
Okay, great. It's 1992, and at that time you were the focus of the organization was to lend money to African American owned businesses. Can you kind of speak to us about, you know, what led to the creation of your organization, the BBIC, and also kind of talk to us about some of the steps that or some of the services that are included in your technical assistance.
Okay, the BBIC bore out of, it actually dates back to the Arthur McDuffie riots that occurred down in South Florida. And it was discovered that there was a disparity between not being enough Black-owned businesses in the community. The issue was they burned down their communities, but they were not their businesses that they were burning down. So the legislatures, years after that, formed the Black Business Investment Board, which was over the entire state. And from that, there were several different BBICs set up throughout the state. There was one in Dade County, Broward County, Orlando, Hillsborough, and Duval, and then Northwest Florida. We covered the entire Panhandle. Subsequently, years later, those BBICs broke away from the board structure, and now they've been individually. So we've been individually owned, operated as a nonprofit ever since that time. But our purpose has been, as I said, to the goal is still the same, to make the business bankable. So, for example, and technical assistance may mean if a person comes to me and they have a request, and we would give them an application, but in providing them technical assistance, if we see that there's some weaknesses there, we may, being myself, coach them through that process. We may actually bring in other partners, such as the Small Business Development Center at FAMU, where they can actually sit them down and kind of walk them through. They will not do the business plan for them, but they'll walk them through their business plan and kind of true it up for them and kind of bring in reality, because they have a lot of resources that to where, if you say you're going to sell a hamburger for $2, they can kind of pull resources and tell them what hamburgers are selling for in the region and kind of compare as to whether or not they're priced correctly. So we kind of work together with that partner and working with them. My mantra has always been, because I've been a lender for 32 years, that if you would come to me, you have an issue, if you're trying to get something accomplished, if you listen to me, I'm going to help you. We may not give you the request today, but we're going to help you. We're going to get you to where it needs to be. That technical assistance could involve looking at your credit report. You have a 580 credit score right now. You probably can't do much with that. Let's look at it and see what's going on with this credit score and see what it takes to bring you up. Now, this was before Credit Karma. Now you have resources such as Credit Karma that will kind of walk you through in a snapshot what you need to do to improve your credit. But we were doing this before those things existed, but helping people do what they need to do to be bankable. And like I said, there are some times where the bank may require you to have a certain credit score, but we can see that the due diligence has been done and the work has been done, and that you've kind of made that turn, and that you're going to be a good credit, that we can go ahead and extend you money.
Oh, that's great. That's great information. Does the technical assistance come at any cost from the standpoint what you're providing?
Absolutely no cost for the technical assistance, and there's no cost from us, nor is there a cost from our partner at the Small Business Development Center. All of this is free, and it's whether we end up doing a loan for you or not, we still provide you the technical assistance.
Okay, great, excellent. That's great information to know. Switching gears a little bit, Chris, you started talking about SBA. Can you just give us like a brief outline? You mentioned that SBA guarantees loans for small businesses, and you said that's important to your financial institution because it helps to mitigate the risk. Can you talk about some of the inherent risks that are involved in starting a business, and maybe some of the things that you look for when you're making a decision whether to loan money or not to loan money to a small business owner?
Sure. One of the biggest risks when businesses are starting, I mean, the statistics are there that 20% of the businesses fail in the first 2 years, 45% fail in the first 5 years. So when we're looking at businesses that are within that 2 years or that 5 years, as a bank, we're in a business as well. If we are doing loans and not getting repaid back, we're not going to be here anymore. We're going to go out of business. So the SBA, for example, on a 7A may guarantee 75% of that loan or 85% of the loan, depending on, there's some different factors out there, depending on what the business will qualify for. That gives us the ability to say, okay, this loan's right on the edge of whether or not we feel that they can repay it completely, but they're going to guarantee 75%. That's an acceptable amount for us of risk to say we'll put that 25% at risk because we feel like this is still a pretty good, a pretty good risk for us to take. Some of the things that we look at when we're evaluating those risks is we look at the track record of the business. That's why, when you look at those first couple years, you want to make sure that they're on the right track. We also look at, and the SBA will look at not only the business and how they're doing, but they'll also look at the person behind it. Who's the guarantor? What kind of collateral do they have? What kind of capital do they have? What's their repayment? What's their credit look like? These are all things that get taken into consideration when you're doing a loan. And, again, having that SBA piece there to kind of back it up makes us just feel a little bit better. One of the things when you're doing loans, if you put somebody in the wrong type of loan, it can be very detrimental to the business. If you put somebody in a loan that's a short-term loan for a long-term need, it can cause a severe cash crunch. So having the flexibility to look at these different types of SBA loans gives us the ability to make sure that we're getting people in the right product or right loan to help their business succeed, because ultimately that's the goal for everybody. The business owner wants their business to succeed so they can be a success in life and pass it on. As a bank, we want them to be successful as well, because without them being successful, we may not get paid back. And that would be detrimental to our business.
Absolutely. So well, thank you for that explanation, Chris. We also have joining us today is Mike DiNapoli, who is representing the Department of Economic Opportunity at the state of Florida. Mike, you out there?
Yeah, I am, Keith. Thank you for having me.
Yeah, good to see you. So talk to us a little bit about what programs and services the Department of Economic Opportunity has for small businesses.
Terrific. I'm happy to do that. And again, thank you for having me. It's nice to be here. Thank you all for joining. So as Keith said, I am the responsible for small business capital here at DEO, state agency. It is a very unique office here that I manage. We've got different programs, different loan programs, homeowner assistance type programs, but it's all centered around capital and capital access. So one of the big programs that we have that you may have heard of is SSBCI, State Small Business Credit Initiative. It's a new program it's an old program renewed for 2021. 22. We just got approved from the federal government. We have about $500 million for small businesses, and we're excited to get this money out to small businesses. We're excited to get more than that $488 million that we were allocated by U.S. Treasury. We expect if we hit those hurdles that Treasury has put in front of us, that we'll get even more money. I'm happy to go into some of the programs, Keith, but you tell me how much in-depth information y'all want me to go into.
Well, you had me at $500 million. To be quite honest with you, that's not a small number there. So, if you don't mind elaborating a little bit on, how our participants could find out more about the program and then maybe access the application process, and maybe
Sure.
even talk to us a little bit about what types of loans you're looking for. That may fit the eligibility criteria of the State Small Business Credit Initiative.
Sure. So SSBCI is a program that you can find a ton of information on the U.S. Treasury website, and it's just ustreasury.gov/SSBCI. The guidance is there. The hurdles that every state has to hit are there. Our plan, I'm sure, our application eventually will be posted. But I can go into it just to give you an idea, give all your members an idea of what exactly we're looking for in the type of programs we're going to be running. So it's all going to be in thirds that we receive our funding, and we should receive our funding within the next couple of weeks, if not sooner. So we're all ready to go. We have venture capital, $30 million of our $142.342 million to be exact. It's coming in the next couple of weeks. $30 million is going to go towards venture capital. And we want to focus on early stage seed and venture capital. So a lot of those really startup type companies Treasury has asked us to invest in, we want to look at. The remaining dollars on that first draw is going to go into our 504 bridge loan program. Those are sort of medium to larger loans. We can do up to $20 million in project size, where we can capitalize per project 5 million of that 20 million. Those are really good projects. Most of them are, they take our funding, but it allows us to recycle our funding quickly. The remainder of our three draws, the last two draws, we have to get 80% of our previous draw on the street before we can go back and get the remaining 80, before we go back and get the second draw, and then 80% of that on the street before we can get our third draw. So I figured it's about a 12-month time frame between that. And on our second draw, we're going to do loan participation, loan guarantee, capital access. Those three, I hope, are what the street is going to be looking for, not only from the lenders, but also from the borrowers. And so I had to separate this into two different categories when I speak about SSBCI. And it's really about getting the lenders to understand the programs, getting the lenders to find a need for this money. And the reason I say that is because every dollar that the state puts out, we have to have private capital of $1 as well. So it's dollar for dollar that we have to loan out, minimum dollar for dollar that we have to put out. So we absolutely need the lenders, and those lenders that are on the call, I encourage you to read more about it. I encourage you to ask a lot of questions about it, because it's a great source of capital for your businesses for whatever reason, whether it's you've hit caps, you want to, I hate to say this, lender last resort, but if you want to move some of the risk over to another book, that would be ours. We're happy to do that. There's a lot of reasons why you would want to bring in a partner in the state, and we can have hour-long conversations about that. Loan guarantee, loan participation are going to be two big programs I think lenders are going to latch onto. Capital access is going to be a little bit more complicated. It's going to be some of the more sophisticated lenders who want to get involved in putting in basically an insurance policy out there, and we can pool the funds together. And that's going to be a longer conversation. I don't expect we'll use that until about the third draw. But that's it. The way we're separating the funding. The one thing that I didn't mention, and I can go into it as well with your members, is there's a lot of hurdles that Treasury has put in to every state for minority lending and for very small business lending. So they have a term called social and economically disadvantaged individuals who own businesses, and then VSB, which is very small businesses of less than 10 employees. That's been the focus of Treasury from the start of this reallocation of the funding to the state. So we need every organization that wants to participate. Every organization that has a minority component to their book, I think we really need to be talking to you, because we want to hit those hurdles, and I want to get more money for the state of Florida.
Excellent. Wow, that's great news. And I hope our participants on this workshop are taking notes, because that is wonderful news. Switching gears a little bit, and anybody can chime in on this, but we received a question. What's a good way to determine how much capital your small business may be in need of, and how does a business bolster its credit to position itself for a capital loan? Chris, you want to take that one?
Yeah, I was trying to get my mute button off. Sorry.
Okay.
A good way to determine how much capital your small business needs is we look at what your plans are. What are you doing as far as what's the future hold, and that can be running some projections, working with the SBDC. They're a great source for again, they've dealt with so many different businesses over the years that they have a good idea. They'll be able to help you with some of that forecasting, because that's a lot of what it is. And some of it's not really a guess, but it's a very educated guess. This is what you think is going to happen. This is what you're projecting. And then we can take it from there and say, okay, if that happens, this is, a lot of it's how much can you afford, and in what form does it need to come in? You don't want to borrow money you don't need. That's a recipe for disaster. So this may be a situation where a line of credit comes into play, where you think you might need $50,000, but you don't know, and you don't know when you're going to need it. Good idea to put a line of credit in place so that you can borrow the money when you need it, rather than having to take it all at one time. Because once you take it, you've got to start paying it back, and you got to start paying interest. That's another expense. You don't want to have expenses you don't need. As far as how does the business bolster its credit to position itself for a capital loan, a lot of it is as far as credit goes. There's not really a business credit report. There's a Dun & Bradstreet, some of these other things. But most banks looking at small businesses are going to look at the credit of the individual. So it's very important you take care of your individual credit, and the business. What we're looking for is the business financial performance. How have you been doing, and can you afford to make the loan payments? Ultimately, again, like I said before, everybody's goal is for it to be successful, and for that loan to help you become more successful. Every time you borrow money, it needs to move your business down the road. If you're borrowing money and it's not helping your business expand or increase sales, increase revenues, increase profits, then we really need to look at what we're borrowing money for. So I hope that answers your question.
Yeah, thank you. Mike or Sherwood, do you have anything to add to Chris' comments?
I'll just throw in there, and I'll turn over to Sherwood. But I will say, I hate when a borrower comes in and they ask for 100,000, but the lender says, "Nah, we only think you're going to get approved for 20 or 30." What's the point? I mean, you put together, as Chris said, a great plan. All of it's pro forma. You're trying to grow, you're trying to build, you're trying to buy inventory. And I say this to lenders: get them what they need, or don't approve them. Yeah, that's been my experience. And underfunding a loan drives me absolutely crazy. Some businesses, yes, are going to ask for more money than they need. They want to keep some cash in the bank for inventory or for working capital. I get it. But, I would tell the lenders, capitalize them for what they need. Don't undercapitalize them. That's not a recipe for success. Work with them. Maybe they truly don't know what they need, and that's where the SBDC can come into place and really build out their need and put their business plan pen to paper.
Great. Sherwood?
The only thing I would add on and looking at the credit of the owners is generally we're going to look at anyone who owns 20 to 25% of the business, because sometimes what will happen is you may have several different owners, and there may be a weak link in that ownership as far as credit is concerned. So just be mindful that anyone who owns 20 to 25% of that business, we're going to want to see their credit report. And a lot of times what happens is you may have the talent, and you may have the strong financial statement or the strong credit. And sometimes that talent is the one that has the weakness. So you might want to work on that, getting that to where it needs to be, so that when you come to the table, everyone has presentable credit. And understanding that, because we're working with borrowers who are work in progress. Your credit needs to show, you may not have perfect credit, but we need to be able to look at your credit report and see that you've made the turnaround, that you've acted in good faith with your credit. If we're looking at a page full of charge-offs with outstanding balances, and we don't see where there's been any effort to pay those off, that's not going to be much that we can do for you. But until you make that change, so I just want to throw that part in there.
Can I just add to that too, Keith? That was a great answer, Sherwood, and I totally agree with you. And I get this question all the time. I've gotten this question a lot in the past, and it was, when we get the money, what can we do now? What can businesses do now to get ready for some of this money? And it's exactly what Sherwood is saying: is get prepared. Be fundable. Get to the point where you are fundable. Hey, everybody's got something they've done something wrong, or they've missed a payment, or they've forgotten to make a payment, whatever it is. But get fundable. Clean up your balance sheet. Clean up your credit at the best you possibly can, if it's not perfect. But also be prepared to look like a true business. And sometimes it just, go out and get business credit. Go out and get a business credit report, and not just your personal credit report. Stop utilizing your personal credit for your business. Just little things that show that you're really trying to make this a great business. As a lender, that's what I would want to see. I would want to see that you're out there on the blue sky days, trying to really build yourself up and build your visibility, build up your credit, build your business, all of those things. And again, I always come back to the SBDC because I think they're a huge help when it comes to things like that.
Great, thank you. Mike, one of the things I wanted to ask you about, you talked about the Small Business Credit Initiative, and you said that you're drawing the money down in thirds. The first tranche of funding is going to be allocated to venture capital. Can you maybe explain to our audience how that typically plays out, or how you envision that playing out? Maybe give us a scenario.
Sure. So 30 million of our 142 million will go on our first draw to venture capital, and we intend on making equal investments over the next two draws, roughly 100 million, 90 to 100 million dollars I see going into venture capital. Right now, we already have a venture capital fund in the state of Florida from 1.0, what we're calling SSBCI 1.0, of about $42 million, and that is run by the Florida Opportunity Fund. This 30 million will be somewhat managed day to day by the Florida Opportunity Fund, but it is truly a brand new funding. It is a brand new manager. We have an RFP out. We're ready to award pretty soon. You'll see that coming in the next few days, probably. But the way it really works is getting to that fund manager, the venture capital manager that we're going to hire in order to run this day-to-day investment. Again, they have requirements that they need to raise capital. They need outside capital as well. It's really, if you've got a venture capital, or if you've got an idea, you've got a company, and you're looking for an investment, and you're in the early stages, and you might need some money, and a lot of money, not just a loan, but you need a lot of money. And a lot of these are new startups. A lot of these are, angel investment type of companies. You're just not going to get a loan. You need somebody to believe in your product. You need somebody to believe in you, and you're looking for an investment. The interesting part about this is venture capital has this moniker of being somewhat difficult to get, because the investors take advantage of these companies. These companies really want the money, so they get the terms that are kind of thrown at them, and they're usually not friendly terms for the company. We make a point of saying these are state dollars. These are companies we want to succeed in the state of Florida and stay in the state of Florida. We don't want them moving to Boston or New York or California. We want them to stay here. So we want to make sure that we really represent ourselves as a venture capital fund that is looking out for the small business. And there's a lot of companies out there that stay away. There's a lot of companies that just don't want to get beat up and get into a position where they lose control. That's not what we're trying to do. We really want those small inventors, those companies that are looking for an investment, to be able to take their idea and make it into a real business. So when you see that company, when you see that venture capital company awarded, that's where you want to go. That's where you want to direct. That's where any lenders are out there that see these type of businesses. You want to direct them right to that company.
Excellent. Does the state take an equity position in that?
No. The state by constitution cannot take equity positions in companies, so we will not be taking equity positions. Most of these are debentures that we're going to be taking. These are either preferreds, or we're going to take some. Most of it is going to be in the form of bonds. It's fixed income capital that we're providing to them, which decreases our rate of return, but we don't care. I mean, we want to provide them with the capital that they need. The only time we've ever taken it, is the only way I can see this happening, is if a company goes public and it gets turned into equity. We have a vehicle that would be able to hold that equity, but our intention is not to draw on a company that potentially would want to sell our shares or want us to get in as an equity holder. So no, the answer would be no.
Okay, thank you for that clarification.
Sure.
Okay, Chris, we got a question for you. How can a new startup business establish credit if their revenues are low? And would you recommend any type of account to help them get started on the path of establishing credit?
Yeah, when the revenues are low, it's going to be a challenge. Especially when it's just starting up. That's when a lot of times they start looking at the personal credit. So on the business side, you can do, business credit cards, things like that you would do on your personal side to start start getting some, establishing some credit. You can, if you have some collateral and things like that, you can get some additional credit by pledging the collateral and things like that. That's always been the challenge. It's how do you get the capital to start? I got a great idea, but I don't have the money to get it started. How do I get started? That's always been the challenge. From our perspective, from our perspective, when like what Mike was talking about is making yourself bankable. A lot of it from our perspective is when the financial reports are accurate and clean. The balance sheets are neat and they're accurate. The financials you're showing, that shows that you know what you're doing in your business. So even with the revenues being low, if you know what you're doing in your business, you have a good plan for how you're going to, increase those revenues and move it forward. To me, that makes you a little bit more bankable. And Sherwood may have, may be able to chime in on this because he's obviously been doing it a really long time also, and does some of the micro loans and things like that. And a lot of times for us, if we see that somebody's paid off some of these micro loans and these smaller loans, then that's where we go, okay, they're credit worthy. They've done this before. They know what they're doing.
Yeah, Chris, you were reading my mind. I was going to ask Sherwood to maybe talk a little bit more about the importance of micro lending and, what his organization is looking for those micro loans.
Okay. I wanted to also kind of tag on to some other things that they can do to build up their business credit. Things such as perhaps putting your cell phone in the name of your business, because that's establishing an account for the business. Now, they're probably going to look at the personal credit of the owner, but if that passes the muster with them, then that's establishing credit in the name of that business. If you have a lease for your business, that can be a way of establishing credit, making sure that the rent is paid on time. And then different vendors that you may deal with, such as your copier. If you have a copy or printer or anything like that, you may be able to get terms on that will help establish credit. But on to the microloan, our loans go as low as $5,000 on the microloan program, and so that's to meet the the real, not necessarily short-term need, but that's really for the small business, the small business that has a small need, and it's to meet that niche. And it also gives you an opportunity to prove yourself because, as Chris alluded to, if you pay us on time, then we may be more comfortable in moving up into a regular loan, because we do loans. Our microloan program only goes from $5,000 to $20,000, but we do loans larger, but we're going to look for a track record. And a lot of times it does fall back to the personal credit of the individual, unless maybe they've had experience with us. There's one challenge with business lending that's somewhat changing, is that not all the time is business credit reported on credit reports. So I have seen clients with 720 credit score, and they're late on a business loan for 6 months. And where's the disconnect? And that's because a lot of institutions don't report their business credit. And we rarely pick up the phone and call that banker and ask, did they pay their business loan on time? There are some things that we can pick up on, like if there's real estate involved and it led to a foreclosure, that will show in the credit report as well as in the public records. But a lot of times it's hard to determine how they paid that business creditor if it's not being reported. So that is a challenge. That's why we lean heavily on that personal.
Okay. And then in terms of, you said you'll go as low as $5,000. And, a lot of the larger financial institutions, when you start talking about commercial loans, I've known some of them to set a threshold at $300,000, which, precludes a lot of minority businesses from even, darkening their doorsteps. Kind of talk to us a little bit about how you are marketing the microloan program, how we can help you get the word out about the microloan program.
Obviously, we have a website on nwflbbic.org. That is our website. Matter of fact, we're participating in some events this week with MedWeek with an open house. But a lot of it has been word of mouth. Traditionally, the way we would market it was through other banks, because when they declined loans or they had someone that they couldn't approve, they would refer them to the BBIC. That's how we've worked a lot traditionally, but a lot of it has been word of mouth through our borrowers and other community organizations that we work with, such as the Big Bend Minority Chamber of Commerce and even the Capital City Chamber of Commerce, working it that way. Now, I will tell you, we don't have the unlimited funds like the state of Florida has, so we have to manage our process a little bit closer. But
Okay.
We work a lot with our partners.
All right, thank you. Mike, this question is for you. I know DEO is gearing up for the new release for the state small business credit initiative, but you also have some existing programs that are being offered to small businesses. Can you talk to us a little bit about those programs?
Sure. So we do have 1.0 currently operational, which is about 50 million for traditional lending and for small businesses, and then about 40 million for venture capital, which is ongoing. And then we're going to recapitalize that with 2.0. Another program that we have is something called the Small Business Loan Fund, RLF, Revolving Loan Fund. It is a $50 million loan program, of which 40 million is statewide and 10 million is for the 12 counties affected by Hurricane Michael. So this money came to us, or 80% of this money came to us. 20% was our matching from EDA. So we've made about 90 loans for that program. About 30 of the 50 is on the street. We continue to make loans every month. We have 3, 4, 5 different loans that we provide. And that runs the gamut, small to up to $2.5 million. We can make a loan. Our smallest loan, I think, is about $25,000. I think that's our minimum. I know we've made 50 or 60,000. It's probably the lowest we've gone so far. We don't need to have matching capital. We don't need to have collateral. We don't need to be first on the collateral. There's a lot of leeway on that for those two loan programs. Another one that we have is BBLP, the Black Business Loan Program. That's in Florida statute. It's been around for 20, 25 years, I guess. Another great program where we get allocated $2.225 million every year from the state legislature. We're excited to hopefully make some changes to that over the next couple of months. There's rumors that we're going to potentially make it a little bit more accessible, a little bit more 21st century, let's call it. There's a lot of craziness to the statute and to some of the rules that's centered around that. But as of now, it's what we have, and that's what we work under. But it is a great program. It is something that can be tapped into from our state. We have administrators that we certify every year. So those are the two primary programs that we lend under. We have some others during emergency, but that is not open all the time. We also have another one that's usually not talked about on any of these webinars, which is the State Rural Revolving Loan Fund, which is really a great tool because the statute is only about 2 paragraphs. And it gives us a lot of latitude to lend to. It's actually a unit of government that we would essentially make the loan to, and then they would act as a conduit to make the loan to a business. So for those of you in the audience who are in rural communities, if your government is looking for a loan to potentially bring a business, grow a business in your county, your city, it's a program that you should look at.
Great. All right, so we're gonna, I don't see any additional questions, so I just want to remind our audience, you can easily type in any questions that you might have in the chat box. But just really quick, and this is for everyone, round robin question. Let's talk about some of the ways, because I hear a recurring theme. It's called preparation. What are some of your best practices for preparation for the application process? What should our listeners be doing now to get ready to apply tomorrow?
They should know their financial status, if that makes any sense, because that's what the application process is really. It's giving your current financial status in writing, in paper. If you look at a personal financial statement, I mean, it asks you about how much cash do you have, what credit cards you have, or what debt you have. And so gathering all that information, it's going to make that process easiest. I can get an idea of how well the business, how well they have their pulse on what's going on by looking at their financial statement. If I find out more information from looking at their credit report than what they have on their personal financial statement, there's a disconnect there. And don't make the assumption that it's going to be on my credit report, they'll find it there. No, you go ahead and disclose it. Disclose it on the application, disclose it on the personal financial statement. The worst thing that you can have is for us to find the information about your financial picture that you didn't disclose. Don't make an assumption. So I would say that's the best thing, to gather your information. And another thing too is, with things such as Credit Karma being out there where you can get a credit report free, there should be nothing that we find on your credit report that you didn't know about, because there may be errors on your credit report. It's better for you to go ahead and pull it, get it corrected, get it updated before you come to the financial institution to apply. It's too easy. There used to be a time where getting a credit report was a challenge and it was a fee involved, but now that it's free, there's no reason why you should be shocked with what's going on with your credit.
Okay, Mike, any advice in terms of preparation?
Talk to the SBDC. I mean, I know I keep plugging the SBDC. Talk to Sherwood, talk to your bankers, talk to Chris. I mean, they're the ones that are going to evaluate. They're better at it than I think than most. Sherwood, I've known him for a very long time, and know him from working with him under BBLP. I mean, there's a lot of really good people out there that really want to help and find them. If you can't find them, ask OEV. How do you get funded? What are the things you do on the blue sky days? Don't wait till you need the money. Don't wait until you're desperate for the money, because you're not going to look as clean. You're not going to look as good from an underwriting perspective. Do it on sunny days. Do it on bright blue sky days. Get prepared. Kind of my comment from earlier. Just be prepared. Get yourself bankable. Get yourself fundable, and work with the professionals. Don't do it yourself.
Okay, Chris, what about you?
One of the things that goes along with everything with what Mike and Sherwood have said is start your relationship with your banker, at your credit union, wherever, before you need it. Go in there, sit down with them, because that's also, they'll help you get prepared to do the loan. A lot of times when you go into the bank and you talk to the lender, that lender may not be the ultimate decision maker, but they can become your advocate. So if you go in there and you've built a relationship with the person, and you talk to them and they understand what you're doing and why you're doing what you're doing, when it comes time to decision, they can vouch for you. They can say, hey, look, I've known this person. I've been working with this person. These people are real. Their business is good. And that goes a long way with a lot of banks in the decision process. Is what does the banker on the street say about that person? There's 5 C's of credit. We're not going to get into all those, but one of the most important ones is character. And if you can prove, you talk to that banker and you've got that relationship with them, they go in and they vouch for your character. That goes a long way in making a lending decision in a lot of banks. So I would advise you, if you don't know who your banker is, go into your bank, your financial institution, your credit union, whatever, and say, hey, I'd like to speak with a business banker, and start building that relationship before you need the money so you can be prepared.
And I'll just add to that too, Keith. Chris said exactly what I say to everybody: relationships. Find your and that's why they call them sometimes, these banks, relationship managers, not bankers, but relationship managers. Find that relationship. Find multiple relationships. There's plenty of, and this is no plug for anybody, but there's plenty of non-bank lenders out there. There's plenty of organizations that have cash to lend that are not traditional banks. The non-bank lenders are taking over the lending world. So find them. They're in your county, they're in your state. They are here. So find them, build multiple relationships, not just one. Find multiple relationships. Because one day that person might not be there. They might be at another, you might need somebody else. So, and they move too. These relationship managers move. So find that relationship manager and stick with that person, that 3 or 4 people, those 3 or 4 people that you know you're going to need someday, somewhere.
All excellent advice, gentlemen. Thank you so much for your time today. We don't have any further questions, but I can't tell you enough how much we appreciate you spending your afternoon with us and helping educate the folks that are participating in Midweek on, raising capital, which again is just vital to all businesses' existence. So I encourage our listeners to reach out to the folks that were part of this panel discussion. As they have reiterated, reach out to the Small Business Development Center at Florida A&M. Reach out to the Office of Economic Vitality. Talk to your accountants. Talk to attorneys. Talk to other business owners, because there's really no reason for you to not be armed with all the information necessary for you to succeed. So thank you again for your participation. And we hope that you enjoy the rest of Midweek. Take care.
Thank you, Keith.
Thank you, guys.
All right.